Alright, let's make some analysis before a market opens. So how's the market looking like? From higher time frame, removing all the joiners here first. Alright. So yesterday I wanted to see a push really yesterday was kind of interesting because I did understand that we could have had like a little bit of a retracement to the downside. We got the I'm going to click this new opening gaps on, and I don't know why it isn't showing in the daily time frame though. Visibility should be showing, but doesn't really matter. We have the gaps in 4 hour time frame. New day open gaps as well are the red ones, but they're kind of small ones. I don't really care about them. We are having decent new opening gaps currently. So, in my opinion, we have broken away from this new week opening gap so well that we don't necessarily have to return. Now, market could return because overall bearish trend. It could result in like additional drop to the downside, and that could easily happen. Yet I'm kind of thinking more of longs as of now because of this bullish trend. We broke above the new week opening gap here. Yesterday, after we kind of consolidated in this new week opening gap, the market didn't show any signs of willing to push lower. I wanted to see this high taken, which also resulted in a good long position. All right, I'll show you what I took. Yeah, so I took this. So usually you don't want to take this type of trades when it breaks above important high like this, but we were kind of chopping around, and usually I would never take this. But there's one condition when I can take this, and it's important, is the fair value gap. So if market is able to print a fair value gap on top of the high, that's usually a sign of continuation for me, and that's how I kind of evaluate whether or not I am like allowed to enter into these type of trades. So that's your BC. So yeah, it's kind of small fair value gap, but it does the job in my opinion here. So what did I do is I took a actually entry here, looking like this. All right, I was 0.5% in, as in that was my risk, and that's how much I took to risk at that fair value gap. It looked like it's going to stop me out, but I was totally fine with that because, or to be exact, I was totally fine with deeper retracement because of the nature of the market. We had been chopping around a lot, so I was totally fine if market didn't want to leave higher very quickly. Deep retracements was expected in my analysis, and then after market flips these two gaps here. So these are the CB important CBs here. After market flipped that, I add in another 0.5% risk, and the average fill around there, and after I got in there, your stop loss was below that low, so that was decent to our trade. Although I didn't hold all the way up here because I was kind of looking at the time. It was starting to be like 11 a.m. Market was closing on to like standard deviation of 1.5 or something like that, minus 1.5, yeah. And market was kind of above that, and I ended up closing my trade somewhere in this region. I made around 1% profit on that trade. All right, that was a good recap of yesterday. A kind of difficult day. I wanted to go long. Basically, I could have actually got into this trade. I almost wanted to take that, but I decided that because of this general choppiness, it just didn't look good enough. And after we broke higher, like after market kind of closes very strongly above in this area, I was looking to get into longs had we pushed lower with the retracement, but it never really did that. So this was kind of the trade that I wanted to take. So fill in somewhere here, like proper retracement there, I would have got in. Didn't happen, and that's the reason why I tried to push for a trade above here, because I knew the market was to push for the buy side, which actually didn't push very well. During the AM session, lunch kind of retraces, PM session consolidates, the final our macro actually pushes price to that price point. So that's one good reason to maybe trade the final hour macro, because that can actually, like, if market has consolidated a lot during the day, the final hour macro can actually push the price wherever you want it to go. You know, considering the fact that the liquidity pool or the main target for the day hasn't been met yet. So, you know, how I would have monetized the or capitalized on the final hour macro had I traded that from 3 p.m. to 4 p.m. Maybe that's something I should start trade more, because I actually like looking at these post session. But yeah, what could you do here, or what would fit my trading plan? Well, I would look at fair value gap in here. This would have to get flipped for sure. And after it gets flipped here, I could have got in with a setup like this, which would have actually profited, but there's a chance that I would have tried to aggressively put on my stop break even after getting above the high here. I don't know. But really, if you got the break even there, I would have tried to get in again with, like, when you get like push like that above a high, that's very nice. There's a break of structure, and you could easily just, you know, trade the price action, enter straight off of that. So this isn't really like how I would say conventional ICT 2022 model, but, you know, trading price action, understanding why price wants to move, you can utilize price like this, and, you know, this would have been the trade of the day, absolute beauty, and so maybe this is something I should start utilizing more. So kind of trying to trade with the final hour macro like this, when the or the whole day actually has been kind of nasty. Market kind of comes close to the high that I wanted to be taken, didn't take that, kind of creates equal highs. A lot of liquidity actually above here, like these areas are a lot of liquidity here, and hence why market pushes actually above, and it actually gives you more entries. Like, you can entry almost anywhere in this chop here. This type of push you can enter like there, get still 2R trade. After this push, if you try to squeeze for a better entry target there, try to get for 2R, I would have my stop below that low, because there is an order block here. Alright, so that could work as an entry, try to push for the 2R, and that actually would have been beautiful, right? So we kind of chopped here, but you know, market was delivering efficiently. It's not really low risk as liquidity around, considering the fact that market is kind of chopping around here, but it's never really moving against you. So very good PMs or the final hour macro. There is though one trap, which is here, that we got the liquidity pool that wasn't taken. We got equal lows here, so that could be a problem if you are trading like the silver bullet of PM session, because from 2 to 3 p.m. try to catch shorts like this one, you could get easily trapped. Although, to be totally transparent, I would have probably taken this trade if I traded the PM session, as in the silver bullet. But if you get caught in this type of chop, after we broke lower here, you wouldn't really lose a trade here, at least with my risk management protocol, because I would move break even after a break lower. So this would be a break even trade here. Alright, so Actually, kind of interesting trading day yesterday, and this is actually a trading day. Maybe you should, and I should too. All right. What did I mean to say? You should journal this and try to learn. Very good day for me, and interesting price action as well. Right now we got that equal lows. Let's see what do we have. Market chops around. It's kind of broken the high here, but didn't really go for the sell side. Never took that low. Here we got some equal highs. Market took them. Come on, here. So market swapped the equal highs. We do have some liquidity here, so we could easily push above like that. But that's the thing, like, we're kind of in a chop right now. Like, I would bet that market is going to run for the highs, but it doesn't actually have to. Like, we flipped the last gap here, which we then reclaimed, respect that. So I would still try to go for the longs, considering the fact that we got like fair value gap here. Yeah. But if we break below this gap, reclaim it like say 50-minute closes below here, I'm going hard for shorts here. So that's kind of the plan, I would say. All right, very good analysis in my opinion, and I don't have like absolutely clear idea because of the general choppiness. High time frame still bearish in my opinion, even though we have put on a couple of bullish days. I'll really have to see the Forex Factory. I think we don't have any red folder news, but I could be wrong. Yeah, we don't have any some durable goods sheet which came out 8:30, so that's here. It's a little bit higher volume candle, but nothing you can trade. Like, if you want to execute a trade at 8:30, I would say that's fine. Like these type of lower volatility news events, yeah, they put on like a little bit of a volatility, but it's nothing massive really. It's just kind of giving a little bit of volatility to the market, and if you are correct with your direction, it usually runs to your direction. It doesn't really manipulate that much. Like CPI could fuck you up, but yeah, these type of things do not. All right. Let's see what happens when market opens. Actually, one thing I like to investigate first presented fair value gaps, so old ones as well, and old ones specifically. So everyone knows that you should mark out the first presented fair value gap at 9:30 open every single morning. But how about first presented fair value gap from yesterday? That could be like an area market is respecting today, and I've seen this happen hundreds of times. All right, so we are trading in Wednesday. Let's go to Tuesday's price action and go for the first presented fair value gap from 9:30. I'll mark that out like this. And what's the first presented fair value gap? Here, it's technically this one. I don't really like that. That's so small. I'll just mark both of these and see how price is moving around both of them. But really, this actually, I'm not going to mark out the smaller one because the bigger one is actually in the same area. So this is really the first presented fair value gap that I should be looking at. All right. So, wait. We actually got one here. Yeah, I think this is the real one. All right. So I'm going to keep this and see how price is moving. So in this case, it doesn't really help us because market is above it, but market could easily use that, or we could easily use that as a target to go short. And the main thing around this first presented fair value gap is obviously these equal lows. I would mark them out as well. Alright, so actually previous day high. I'll mark that out as well. Oh, we took the previous day high immediately at the new daily candle open. I'll put like previous day high swept. Okay. So this kind of choppy environment, market could do either this, maybe even this, and maybe this, or it could just drop. This is an like environment where you shouldn't really try to take aggressive entries. Maybe at 9:30 open, don't take the trade immediately. Really, I need to see like proper 50-minute candle closer below this low until I can really take convincing shorts. I would say that, or if not below that low, at least below the CE of this wick. So it must not respect that CE of the wick. So that's kind of interesting, as we'll see how that kind of candle closes in 9 minutes. But other than that, I'll see how the first presented fair value gaps, because we are trading in this general region. Do we have any first presented fair value gaps in here? These are kind of old ones, and I don't actually know if I have the data to kind of go this far back. And the first presented fair value gap is 1 minute. 1 minute fair value gap. They are not that necessarily as important, as for example like new week opening gap. But especially if you got like recent ones, like a couple of days old first percentage fair value gaps, they work wonders. But I'll see. When is this? Yeah, this is like 20 days back. I'm not gonna have the data for that. And you can also utilize like first percentage fair value gap from the 5-minute time frame from the daily perspective. Yeah, I'm not going to have the data there. Not even 3 minutes. Maybe I should pay for pay for trading weed. You know what I'm saying? But let's say here we kind of chop here. The first 5-minute fair value gap is actually this one. Let's see how that kind of looks like. So market, you can see how we're actually respecting the CEO of that. So that's actually interesting. That's interesting in my opinion. And market breaking lower, flipping this gap is convincing for me to kind of consider shorts. So I'm probably trying to catch short today. That's what I'm thinking here. Also, market willing to reject off of a weekly area. This is the weekly, or actually, I'm going to mark out weekly fair value gap quadrants, because this is so large of an area that I like to see the 0.5, 0.75, 0.25 levels. So the 0.25 level is actually far down here. So market is opening in 7 minutes. What I want to see is market kind of stalling right now. I don't want to see like massive push before the 9:30. Like if price is trading down here at 9:30, I don't know what to do. Like it's a little bit too much. I would want to see like a proper retracement now. Market kind of chopping like this. Maybe 9:30, manipulating higher, giving proper structure. I could short that, but this thing melting right now to the downside. I ain't gonna deal with that. I'm going to tell you that. So we will have to be, or we need proper structure, not too fast before my favorite times. Right. So. When it comes to ES, I don't actually like these equal highs here. considering the fact that I want to go short. But you know, there's SMD there, very nice one actually. Looking at ES, NQ actually, I do like this SMD here. But problem with NQ, sorry again, problem with ES is that it's looking a little bit more bullish than NQ. We broke above a high here. Market's having like proper fair value gaps here. Market wants to push there. We got the equal highs. This could be like bullish structure causing price to drive higher, which I don't like again. So there's a little bit of a interesting price action I need to see. I would say if this fair value gap inverses here, or this small one here, if this inverses, I would be more in favor of shorts as well for NQ. That's what I would say. Although the NQ price action is looking fine, and that's that. But if ES starts to give like many bullish signs, I'm not going to lie, the longs kind of look nice for ES, which could mean that I'm going to try go long on ES, but that would require NQ to actually give enough signs of not willing to push lower. So there are a couple of things I need to look at here and be careful, because the indexes are not like 100% lined up with each other. All right, market opens. I would need to see like a push higher here at the market open immediately for us to get any high quality shorts, I would say. If it starts to push lower, there is not a trade in any way. So let's see if we can actually push up a little bit. We don't actually need to break any highs although maybe if we sweep highs here and start looking weak, that could actually be decent. But if we break in like reality and all honesty, if we break above these highs, I would feel a little bit uncomfortable with the chance that maybe what market wants to chop around the end of the day, and maybe again run for the sell side during the PM session like this. So a couple of things here. Market gaps higher. So the opening range gap is above price, so price actually gaps lower, and which I don't like to have it like this. Like just have like a small notation where the gap is. All right. So far we haven't moved much of anywhere. Yes, looking like we're having proper reaction out of the area here. Let's see what the new wick opening gaps are. So yeah, I said that yes, looks like a little bit like a bullish. Yeah, it kind of looks like it, but we do have some sell side as well, and we got massive new wick opening gap, and price likes to navigate, or sorry, not navigate. Or I would say new wick open gaps like to work as magnet for price, which in this case could mean that market wants to push lower. But gun to my head, I would say we are moving for the highs first, and maybe we could dump after that. So that could actually be like a high SMT here, but obviously that is technically like we got a large range to drive to the new wick opening gap here. So wait, how's this? Is this correct? Is this the same gap as? No, it's not. What? I don't know why it doesn't show here, but 5 minutes, yeah. So we do probably have enough volume to be able to drive here and here, but I would want to see a proper rejection from here, and we can then push lower. Like if fair value gap, if this one flips here, we're probably just going to push for the lows. Yes, as well. So NQ looks again like it's going to leave us without any trade. So Probably ES is the best bet to go for here if you want to take a setup. I'm gonna try to take ES shorts here. And maybe like aggressive break even. Because I do like, I like this new wick opening gap here. Alright, I'm in short on ES. Very good fill here. Exactly around there. Stop could be above that, but I'm just having a safe stop above that wick, and I would want to target the new wick opening gap and liquidity inside of that exactly around here. So this is a little bit of a quick trade. I'm not going to lie. But we got the SMT. And NQ starting to push to the downside so heavily. Maybe even this one could be a trade to take, but okay, yes, puts on press wait. That's the first percentage fair value gap, so that's a good fair value gap. And by the way, I don't like how we're respecting this fair value gap here, but it's whatever. I don't really care. All right, that didn't work out. I mean, looking at this, it was kind of a stretch. I would let's see how we're moving around this open range gap. We do have some buy side here, so if market is actually starting to show like proper bullish signs, then I'm expecting market to actually push above the high here. We do have some equal highs here, like relative equal highs. Okay, if I had proper chance, I would get in the longs actually, because we put on SMT here, and as I told, ES was looking a little bit of more bullish, so I would want to get in here. I should have maybe taken this, kind of missed that one. So we'll see how. Although this could be a little bit of a trap, it's kind of chopping around here, so maybe it's best to kind of stay out. And we're reacting out of the CE of the open range gap. High here, 908. Yeah, SMT here as well. You know what? I'm not gonna take anything here yet. We'll definitely have to see more price action here. Like for example, price coming lower, maybe putting like a fair value gap here, flipping that, then maybe I could try to look for longs, but trying to just long something like this. Maybe if this got flipped, the 5-minute gap in here, but it's probably not gonna happen. 5 minutes for the almost 5 minutes for the next 5-minute candle close. So at that point, it's probably already here, unless it kind of consolidates more. All right, now we're pushing a little bit lower. This could be like a turtle soup to go along. I'm not going to lie. This is the first fair value gap here. So long from that first fair value gap isn't the worst idea, I would say. But looking at the 15 minutes, just don't like it that much. It's implying more of longs in my opinion, but looking at ES as well, we swept the same highs. We haven't swept on NQ at all. So here I would demand a little bit more from price. Currently not seeing very strong price action at all. That would be the turtle soup. If it now rejects lower, that could be something. But we got double SMT with the highs and with the lows. So and after I took the loss at the market open, really not that interested in taking quick another trade. So really just I need to be patient here. And I'm gonna tell you, I would like to take this trade, but I have to stay disciplined here. Choppiness looks like she can destroy. When price action is actually like very nice, it will tap the low here and go quickly after the next candle to the upside, and it's not doing that right now. So I don't like this is not a trade you want to be in. And if it starts actually reacting out of here and respects this first fair value gap, maybe I can find a better way of getting in, maybe like inverse at here or some type of other entry. But here now, I don't think so. Breaker. And the first fair value gap. So this is a breaker here. But it's kind of stacked with all these other things like first fair value gap, so I don't really care about that. Yes. Swept the high. SMT above. Don't really like that. Like, could this be just a retracement to move lower? I mean, it could. And that's a problem if you're trying to take a trade currently in here, because market actually came to open range gap CE, and it doesn't actually need to move higher at all. Like maybe I'm correct, and possibly I am correct with the bias to go for market to drop down here, but that's kind of problem because we got almost like two biases, equal highs here, equal lows here. We got first percent of fair value gap here that we didn't really ever come back to. So, I would technically like to go short, but we're seeing too much of choppiness, SMTs, both sides of the market. Unfortunately, there isn't really enough evidence to go to long or short as of now. Okay. Okay, now we've broken below the first fair value gap. I like this, but it's probably just going to push for the sell side here, not giving me any trade here. Early sells got liquidated and market moves for the sell side. That's exactly what market makers want to do. Manipulation back to this first percentage fair value gap, and I'm probably going to short this. I'm not expecting that to happen though. This is just one of those days where price action isn't really favorable. All right. Well, market dropping towards the first percent referral gap from Tuesday, sorry. Sell side. You know, the best trade for the day would have been like sell from the free 5 minutes, but I mean that's not really my way of trading at all. Very close for that, or very close to that low. So if you could put on like a retracement now, that could actually give me a setup still. I'm not gonna lie, but nah, that ain't gonna happen. That is not going to happen. We're pushing for that low. Now, after this got swept, now what is the objection here? I mean, I'm really trying to see if we can push for that low and then reject out of the new wick opening gap. That would be my bet here. But usually, when you're trading to that first percentage fair value gap, it's going to spark some type of retracement here. You know, in which case, if that kind of thing was to happen, I would maybe then maybe take like a continuation lower if we can then build some structure in this region. That would be fair attempt. But try to be better every day. Is there really a way for me to get into this trade? If this candle here flipped the first percentage fair value gap, I would have got in. I will say that. But it didn't flip the gap. We respected that. And when we flipped the gap and it merged, market was already trading down here and didn't really give a retracement. So there isn't really setup here that I absolutely like. With ES, manipulated a little bit higher. We still got range to drive lower. So ES could give you something, but it's kind of melting too fast right now. Like, I don't really know where to get in. Like, if I tried to sell, I would go for the first fair value gap, but where the stop would have to be minimum at that time. So not really great either. All right, way too quick melt. We already took that sell side that I'm told about here, and that's the new week opening gap as well. Too large range. I don't know how to really participate. Like, it's kind of putting a little bit too much volume right now in. Like, yeah, it can retrace, but I'm not going to buy a retracement. And if it's going to retrace like this, I don't know if we have enough time to actually, or enough volume to actually continue massive drop again. So really, I don't really see potential in this day anymore, and that's why I would close the day saying that I was a little bit too naive here. I was, at the end of the day, I was correct with the bias, but I was a little bit too naive with trying to short ES at the open. So we'll try to learn from this, and see you tomorrow.